Welcome to the Deep Dive. Today, we're taking a closer look at Grxton.live. You might see it called GRX. It's a crypto platform making some pretty big claims.
Big is putting it mildly.
Right, so our mission here is simple. Figure out if this thing, GRX, promising these crazy high daily returns, is actually viable for you, the listener.
Yeah, because when we say high returns, we mean it sounds almost unbelievable. GRX claims they're using, quote, cutting-edge algorithmic trading and machine learning.
Okay, standard buzzwords.
Totally. And they say this tech generates returns from 4% up to an absolutely eye-watering 8.6%
Per day.
every single day. So yeah, you need to know if that math could possibly add up in the real world.
Okay, let's unpack the hook then. The numbers themselves, these investment tiers are interesting.
They are. They start you off small, right?
Yeah, the Income Builder plan. It offers 4% daily trade, but just for one day. Minimum buy-in is only $40.
See, it's low enough. Makes it feel like, oh, what's $40? It's almost like just playing around.
Exactly. Low risk, potentially high thrill, but then they scale it way up. If you've got serious cash, there's a plan promising that 8.6% daily.
But that one needs a minimum of $5,000. Goes up to $1 million max.
So they cover both ends, the small bet and the whale play.
Right. The numbers are designed to pull you in. But okay, before we get mesmerized by 8.6% a day, we need to look under the hood. What's actually behind this?
Good point. Why all the fancy talk? Algorithmic trading, machine learning. Isn't that just, camouflage sometimes?
It often is, yeah. It's the go-to explanation when the returns don't make mathematical sense otherwise. And when you start digging for actual proof, well, the red flags pop up pretty fast.
Like what?
Well, first off, the platform seems to be run by anonymous people. We don't know who they are.
Okay, anonymity, that's flag number one.
Big one. And the domain, Grxton.live, it was privately registered really recently, July 16th, 2025.
Just this year. Wow.
Uh-huh. And it's set to expire in 2026.
So, like a one-year lifespan plan, that doesn't scream long-term investment platform.
Not at all. It shifts the whole vibe from maybe innovative startup to something that feels, well, temporary, short-term.
But couldn't they argue, our trading tech is secret, it's proprietary, we don't need to show public metrics. Where's the smoking gun against them trading?
The smoking gun is precisely the lack of any evidence for it. There is zero proof of any trading activity. None. No licenses, no verifiable stats showing performance that's linked to actual crypto markets. Nothing.
Okay, so if the tech isn't making the money, where's it coming from?
Got to follow the money. Right?
Exactly. And the only thing you can see, the only visible way money seems to be moving is their multi-level affiliate program.
Ah, network marketing. MLM.
Precisely. The source analysis we looked at basically called it an MLM that's just pretending to be a trading platform.
So it's reliant on recruiting.
Yeah, the conclusion was it's essentially trading people for crypto. Your returns aren't from Bitcoin going up or down. They're from signing up new members below you. Which, okay, immediately brings up the big S word, sustainability. If it's all recruitment, this can't last, right? Why is it basically guaranteed to collapse?
Because those daily returns, 4% to 8.6%, are just fundamentally unsustainable if the only money coming in is from new recruits. There's no external profit engine like actual trading would provide.
So it just needs more and more people feeding the bottom.
Right. And the moment recruitment slows down or dries up, as the source put it, the whole thing implodes. There's no new money to pay the promised returns to the earlier investors.
Our sources pointed out something interesting about the mindset of people involved. They called it gambler logic.
Oh, yeah. Tell me about that.
Well, apparently a lot of people, especially maybe those who put in the initial $40, they're just happy if they get that seed money back.
Okay.
And then anything after that, they see it as house money, like they're playing with winnings, not their own cash.
Ah, right. So they feel like they're not risking anything anymore, even though the whole system is shaky. It's like they're trying to time the collapse.
But that's just gambling, isn't it? And it completely ignores the risk for people who just put money in and don't recruit, the passive investors.
Exactly. That mindset is dangerous because it masks the real danger. What about the person who isn't out there recruiting constantly?
Yeah, what happens to them when music stops?
Well, the analysis gave a specific example. Say a passive investor puts in $1,500. When the platform collapses, which it inevitably will,
They lose it all.
they're likely to lose most of it. The example estimated they might lose around $1,150 at $1,500.
Wow. So even while it's running, it's essentially just burning through most of your capital unless you're actively recruiting to offset it.
That's the hidden depreciation. You think you're earning, but the structure means you're almost guaranteed to get back only a fraction if you're not constantly feeding the system.
So, wrapping this up, our deep dive really shows Grxton.live having all the, well, the classic signs of a Ponzi scheme.
It really does. The reliance on new money to pay old promises, the lack of any real underlying profit generation, it fits the pattern.
Okay, so the final thought for you, the listener, has to be about risk. How do you assess something like this?
Right. Think about it. You have a system promising the moon huge returns, but with absolutely zero proof of how it's making that money. Is putting your capital there really a better bet than, I don't know, putting it in a traditional bank?
Even though banks give you, like, almost nothing in interest these days.
Exactly. The interest might be tiny, minuscule even, but the bank's mechanism, while low yield, isn't designed to guarantee a near total loss when the people running the scheme inevitably cash out and disappear.
So it's low-yield security versus guaranteed collapse.
That's the comparison you need to weigh, something to really think about before chasing those kinds of daily returns.